Hey, what is up everyone? It's David here. I have promised myself to record a video no matter what today for you, and no, this video is not financial advice or recommendation to do anything. I wanted to update you on my perspective around what's happening in the market and also what I've been working on and where I've been. How come I haven't posted a video for a little while? So the first thing I want to start off with is the markets. Over the last couple of weeks, US total market have been up for about 5%, 6% in the Australian market, and technology had a great rally for about 10%. But those are all relative because technology stocks probably got destroyed the most before the indexes reflected that damage. And personally, even though I'm a half glass full kind of guy, I don't really believe that the tough times are over yet. The 10-year minus 2-year treasury yields are getting close to being negative. And when that happens, that's generally a sign for tougher times ahead. And because inflation is at an all-time high, the central banks do have to consider raising rates because that's their main tool for controlling inflation. And how fast or slow they raise rates will basically determine whether we're going to go into a recession or not. When central banks like the Fed or RBA raise rates, it's not just stocks that get smashed. It's basically all types of assets. And in Australia, one of the biggest things that we care a lot about is property. And recently AFR released an article on potential areas that have already peaked. I think there's a silver lining here. Because of what's happening, the markets don't really care whether the company are high quality or low quality. Anything that doesn't generate cash flow, had a bad quarter, or just weak guidance got completely destroyed. And the exact same thing is happening to layer one crypto assets as well. So for me personally, where I have a long investment horizon, this is a great time to do my studying to try and understand how can I potentially allocate my own money or invest my own money so that I can reap the opportunities that's in front of me over a long period of time. Another silver lining that I think is really interesting is that when bond yields rise, it means that institutions are selling. And I was looking at the net asset value of a global index fund that tracks basically the country, government bonds, corporate bonds, and also junk bonds. And this fund is essentially $3 trillion. And the net asset value for this fund have deteriorated pretty badly since when the pandemic first hit. But to put things in perspective, this bond fund had basically one of the biggest bull runs since 2011. So it's showing some kind of correction. And I think the silver lining here is that when institutions sell, they do have to find a home for that money. Holding it in cash, yeah, while it makes sense, but because of how much money the central banks are printing, you're basically deteriorating your money like relatively quickly if you don't find an opportunity for that money. So if that money has to find a home, then the different rises of different assets will give us a hint on where that money is going. If you want to know where money is potentially flowing to, there's no way around it other than doing more research around what asset managers are thinking about. And the best piece of writing that I've read recently is BlackRock Chairman's Larry Fink's letter for shareholders. I have left a link in the description box below. It's pretty long, but I think it's a very good read. There are two main things I want to highlight. The first thing that he mentioned is that the macro situation is making countries think a little bit more about depending on other nations for things. And I think a really good example of this is the battery supply chain, where a lot of our resources, even in Australia, we sell our lithium or graphite to China to be processed, and then it gets shipped to other countries to be made into batteries locally before it gets shipped to basically car manufacturers. And another highlight in that letter is that also because of what's happening, there's an acceleration towards digital currencies for faster settlement while reducing the risk of money laundering and corruption. And I think it's really interesting that ANZ, which is one of the big four banks in Australia, have minted the first stablecoin that is pegged to the Australian dollar. And also what's really interesting about Larry Fink saying that there's an acceleration towards digital currencies is that traditionally Larry Fink has been like pretty bearish towards crypto, and to see that turn around and now saying that like because of the demand for digital assets, BlackRock could be potentially providing crypto trading services to its investor clients. It's telling you that there's a bigger shift that's currently happening towards digital currencies. Now, of course, you have to form your own opinions in terms of where you think money is flowing towards, where you think the biggest opportunity is. I have my own. But I am anticipating tougher times ahead, and I'm sticking with my own investing routine. I keep investing in broad market-based ETFs. I dollar cost average into layer one crypto assets I personally love, and I've doubled down on specific companies that I already own. So it's basically everything I've mentioned so far or documented on my channel so far, but I will do a portfolio update in my community post very soon, so stay tuned for that. The most important thing I do want to leave you with is that when I am navigating a tough time ahead, my number one priority is securing my ability to generate income. And I try to ask myself these three questions as often as I possibly can. First question is, can I solve tougher problems in the company that I'm at so that I'm a lot more valuable? The second question is, can I upskill in areas that would make me a better problem solver? And the third thing is, can I better monetize my skills via some kind of side hustle or other means so that I can refine my skills and get better with my skills? And lastly, just to give you an update on where I've been, I haven't been very active in posting, mostly because I've been hiring very aggressively in the company that I'm in. And I think one of the things that's really important to me is that instead of being an investor that's looking from outside in, I really wanted the opportunity to be inside a company and learn how to build a $1 billion company. And so then that way, when I look from inside out, it will give me a different perspective in terms of what it means to have a great company on your hands. And the opportunity I have currently, I think if we were successful, we will change a lot of people's physical well-being. So I'm honestly just trying to make the most of this. If you want to stay up to date with what I'm doing, either follow me on Twitter or add me on LinkedIn. I provide a lot more frequent updates there. Until next time, Otto will always say the goodbyes, and I'm going to see you guys very soon.